Well, shares in Facebook owner Meta plunged by around 20% in after-hour trading on Wednesday, knocking a massive $200 billion off the company's value. Chief Executive Mark Zuckerberg had warned investors in a call earlier that Meta expected first-quarter revenues to decline due to competition from rivals such as TikTok. If the stock doesn't rebound before trading resumes on Thursday, it will rank as the worst day in the company's 10-year stock market tenure and one of the biggest one-day falls of any company on record. Let's get some more of this from Rob Watts from DW Business. Rob, what's going wrong there at Facebook?
Well, we're witnessing a real turning point for the original social media giant because for the first time in its 18-year history, it's seeing the number of people using its platform fall in the 3 months towards the end of last year. Around 1 million fewer people were using Facebook every day than they were in the previous 3 months. Well, in the grand scheme of Facebook, no, it's not. 1.9 billion people use Facebook every day. But the thing is, it's not the fact that it is a falling number. That it's a big falling number. It's the fact that it is a falling number because Facebook in its entire history has only seen the number of people using its site increase. And why is it doing that? Well, Mark Zuckerberg's been pretty clear about it, quite frank about it, really, saying that they are losing, particularly younger users, to platforms like TikTok and YouTube because people's tastes are changing. And there's more bad news for Meta in that their revenues are also slowing. Why is that? It's because they're making less money from advertising, which has always been a big money spinner for them. The reason for that, well, there's many of them. If they're losing people, obviously, using the site, then they're making less money. Also, companies are advertising a bit less at the moment because supply chain problems means they're already struggling to meet the demand that they've currently got, and the last thing they want to do is attract more users. But there are also problems with privacy as well, like privacy policies that have been introduced, for example, by Apple are taking a real toll on the likes of Facebook. In fact, Facebook reckons it's going to take a $10 billion hit from the Apple privacy policy changes alone this year.
So let's talk about the impact these messages had on the market.
Yeah. So as you mentioned, 20%, in fact, 22% wiped off the value of Meta's shares in after-hours trading on Wall Street, which is, a vast, vast drop. It represents, as you mentioned, $200 billion, which is bigger than the economy of Greece. This is a huge value drop and something that has really spooked the market in general, not just Facebook. It's had a knock-on effect for other social media. We saw shares in Twitter fall, we saw shares in Snap fall, we saw shares in Pinterest all go down because they're starting to see that if growth is slowing at Facebook, then we are really seeing a change in how people use social media in general.
Well, that's a good point. The face of social media is really changing. Does Zuckerberg does he have a plan for that?
Well, the change of the name towards the end of last year from Facebook to Meta, of the parent company, is a really big hint that they're not pinning their future hopes on the platform Facebook itself. It's also a huge hint as to what they are pinning their hopes on, which is this concept of the metaverse, this virtual reality world where we can all move around, playing, meeting people, working, but most importantly, consuming, buying things. And that's a great idea and something we can all imagine happening in the future, but we are only imagining it at the moment, and it's going to require a huge amount of investment. Facebook already invested $10 billion in this concept last year, but it's going to need lots more, and that makes it a real gamble because that investment isn't going to pay off for many years yet.
Rob Watts, DW Business. Thank you very much, Rob.